Hey there, investors. Let's talk about something different today. Forget the stock market frenzy for a minute. We're diving into the exciting world of alternative investments. Alternative investments are like the cool cousins of stocks and bonds. They are investments you don't find on the regular stock exchange. Think of them as assets you can buy and sell outside the usual Wall Street hustle. These investments can be anything from a Picasso painting to a vintage comic book collection. Real estate, precious metals, and even fine wine can be alternative investments. It's a diverse world out there. So why should you care? Because alternative investments can add spice to your portfolio. They can offer different returns and protect you from market swings. Intrigued? Let's explore further. Alternative assets are like a buffet for investors. There's something for everyone. Let's break down some popular options. Art and collectibles. Imagine owning a masterpiece or a rare baseball card. These assets can appreciate significantly over time, especially if they are unique or historically significant. Real estate. This old-school investment never goes out of style. From rental properties to commercial buildings, real estate can generate income and appreciate in value. Commodities. Think gold, silver, oil, and agricultural products. These raw materials are the backbone of the global economy and can provide a hedge against inflation. Private equity investing in private companies or startups can offer high returns, but it also comes with higher risks. These are just a few examples. The world of alternative assets is vast and constantly evolving. Remember, each asset class has its own risks and rewards. Do your homework before you dive in. Now you might be wondering, why should I bother with these alternative investments when I can stick with good old stocks and bonds? Well, there are a few good reasons why savvy investors are turning to alternatives. Hedge against inflation. When inflation rears its ugly head, the value of your cash dwindles. Alternative assets like real estate and commodities tend to hold their value better during inflationary periods. Diversification. Don't put all your eggs in one basket. Alternative investments can help diversify your portfolio and reduce your overall risk. If one asset class takes a hit, others can cushion the blow. Potential for high returns. While riskier, some alternative investments have the potential to outperform traditional investments. Think of a startup that becomes the next Google, or a rare comic book that skyrockets in value. Passion and tangibility. Some people invest in alternatives because they are passionate about them. Owning a piece of art or a vintage car can be emotionally rewarding. Remember, alternative investments are not a get-rich-quick scheme. They require careful research, due diligence, and a long-term perspective. Before you jump headfirst into the world of alternative investments, it's crucial to understand the risks involved. These investments are not for the faint of heart. Volatility. Alternative assets can be highly volatile, meaning their prices can fluctuate dramatically. This is not the place for short-term speculation. Liquidity. Unlike stocks that can be bought and sold instantly, some alternative investments can be illiquid. It might take time to find a buyer when you want to sell. Valuation. Determining the fair market value of an alternative asset can be subjective and challenging. It's not as simple as looking up a stock quote. Regulation. Some alternative investments are less regulated than traditional investments, which can increase the risk of fraud or scams. It's crucial to do your homework, understand the risks, and consider your investment goals and risk tolerance before venturing into alternative investments. Section 5. Diversification, the art of spreading your investments. Diversification is like building a strong foundation for your investment portfolio. It's about not putting all your eggs in one basket. Alternative investments can play a key role in this strategy. Think of your portfolio as a pie chart. Traditionally, you might have stocks and bonds as the main slices. Adding alternative investments is like adding new slices to the pie, such as real estate, commodities, or private equity. By diversifying with alternative investments, you reduce the impact of any single asset class on your overall portfolio. If the stock market takes a nosedive, your real estate investments might hold steady or even appreciate, cushioning the blow. Remember, diversification is not about eliminating risk entirely. It's about managing risk effectively and aiming for long-term growth. Section 6. The allure of tangible assets. Investing in what you can touch. One of the appealing aspects of alternative investments is the tangibility factor. Unlike stocks, which are just numbers on a screen, alternative assets like art, collectibles, and real estate are physical objects you can see and touch. This tangibility can provide a sense of security and satisfaction for some investors. There's a certain appeal to owning a piece of history, a work of art, or a classic car. It's like owning a piece of the story. Moreover, tangible assets can act as a hedge against inflation. As the value of currency depreciates, the value of physical assets tends to rise. This makes tangible assets particularly attractive during periods of economic uncertainty. However, it's crucial to remember that not all tangible assets are created equal. The value of art and collectibles can be subjective and fluctuate based on trends and market demand. Section 7. Riding the wave. Capitalizing on trends and passion investments. Another exciting aspect of alternative investments is the opportunity to capitalize on trends and passion investments. This is where things get really interesting. Imagine investing in vintage video games in the early 2000s or cryptocurrency in its infancy. These were niche markets that exploded in popularity, rewarding early adopters handsomely. Passion investments like collecting rare sneakers or investing in sports memorabilia can also be lucrative. When you combine your passion with market demand, you create a powerful recipe for potential returns. However, it's crucial to approach trend-based and passion investments with caution. Fads come and go, and what's hot today might be forgotten tomorrow. Thorough research and a long-term perspective are essential. Section 8. The due diligence stance. Research before you leap. Before you dive headfirst into any alternative investment, it's crucial to do your homework. This is where due diligence comes into play. Due diligence is like detective work for investors. It's about thoroughly investigating an investment opportunity before committing your hard-earned money. Here are some key steps in the due diligence process. Understand the asset class, its historical performance, and future potential. Verify the seller's reputation, track record, and legitimacy. Identify potential risks, including market volatility, liquidity issues, and regulatory uncertainties. Consult with financial advisors, attorneys, and other professionals to gain valuable insights. Remember, due diligence is an ongoing process. It's not a one-time event. Continuously monitor your investments and stay informed about market trends and regulatory changes. Section 9. Expert advice. Seeking guidance in the world of alternative investments. Navigating the world of alternative investments can be daunting, especially for beginners. That's where seeking expert advice becomes invaluable. Financial advisors, attorneys, and other professionals specializing in alternative investments can provide valuable guidance and support. Can help you create a diversified portfolio that aligns with your investment goals and risk tolerance. Can review contracts, ensure legal compliance, and protect your interests. Can provide expert advice on art acquisitions, valuations, and market trends. Can help you find, evaluate, and negotiate real estate deals. Remember, not all advisors are created equal. Look for professionals with experience in your specific area of interest and a proven track record. Section 10. Starting small, dreaming big, taking the first steps. Ready to dip your toes into the exciting world of alternative investments? Here are some practical tips to get you started. You don't need to be a millionaire to invest in alternatives. Start with a small allocation and gradually increase your exposure as you gain experience. Focus on asset classes that align with your interests and knowledge. If you're passionate about art, explore art investments. Don't put all your eggs in one basket. Diversify across different alternative asset classes to manage risk effectively. Alternative investments are a long-term game. Don't expect to get rich quick. Be patient and ride out market fluctuations. Remember, investing is a journey, not a destination. Enjoy the process, learn along the way, and never stop exploring new opportunities. Section 11. The thrill of the chase. Embracing the adventure of alternative investments. Investing in alternative assets is not just about making money, it's about embracing the thrill of the chase, the excitement of discovering hidden gems, and the satisfaction of owning something truly unique. It's about holding a piece of history in your hands, whether it's a vintage comic book, a rare coin, or a classic car. It's about appreciating the beauty of art, the craftsmanship of collectibles, and the potential of emerging markets. Alternative investments offer a world of possibilities beyond the traditional stock market. They allow you to diversify your portfolio, hedge against inflation, and potentially achieve significant returns. So, embrace the adventure, do your research, seek expert advice, and start exploring the exciting world of alternative investments. You never know what treasures you might uncover along the way.